All right, welcome to the very first newsletter. Today is October 14th, 2020, and we were finally able to get this out. If you have not watched the welcome video yet, please go back and watch that. It's going to eliminate so many questions that you might have about this. So watch that video first, and then we will get into this. We're going to start off with a bit of mindset. If we want to be better traders, mindset is a huge, huge component to that. So I'm going to start off with a little bit of a story. There is a reason behind everything that I do, all right? Mindset is very, very important, and this is going to help with that. So to start off with, the water hyacinth. I'm going to read this to you. The water hyacinth is a beautiful, delicate-looking little plant. Prized as an ornament, it sports 6 petaled flowers ranging from a lovely purplish blue to lavender to pink. You can find it floating on the surface of ponds in warm climates around the entire world. The water hyacinth is also one of the most productive plants on Earth. Its reproductive rate astonishes botanists and ecologists. Although a single plant can produce as many as 5,000 seeds, the method it prefers for colonizing a new area is to grow by doubling itself. It grows by doubling itself, sending out short runner stems that become, quote, daughter plants. If a pond's surface is fairly still and undisturbed, the water hyacinth may cover the entire pond in 30 days, or 1 month. On the first day, you won't even notice it. In fact, for the first few weeks, you will have to search very hard to find it. On day 15, it will cover perhaps a single square foot of the pond's surface, a barely significant dollop of color dotting the expanse of placid green. On the 20th day, 2/3 of the way to the end of the month, you may happen to notice a dense little patch of floating foliage, about the size of a small mattress. You would be easily forgiven if you mistook it for a boy's inflatable life raft, left behind during a family picnic. On day 29, 1/2 of the pond's surface will be open water. On the 30th day, just 1 day later, the entire pond will be covered by a blanket of water hyacinth. You will not see any water at all, only the water hyacinth. This, my friends, is the power of compounding. The story of the water hyacinth came from this book, The Slight Edge. People ask all the time, what's a good book recommendation? I have read hundreds and hundreds and hundreds of books. That is not a lie. Notice that I am leading my book recommendations on the very first newsletter with this one. That means it's important. If you want to read a book about trading, if you're serious about getting better at this, read this book. The Secret to Your Success, not just in trading, but in business or really any skill that you are trying to develop. The secret is right there in that book. It's called The Slight Edge. Go get it. But that was just a little excerpt, a little story from that book that talks about the power of doubling, right? So if we go back, on day 29, only 1/2 of the pond's surface is open water, and on the 30th day, the entire pond is consumed by the water hyacinth. But keep in mind that on the 20th day, only 2/3 through the end of the month, all you will see is just a little patch. That's the power of compounding. We're going to talk a lot about that. Here's another story relative to that. Would you rather have a penny that doubles each day for a month or $1 million? Think about that. Some of you have already heard this, but would you rather have a penny that doubles each day for a month or $1 million? If I proposed that to you, what would you choose? Well, here's what a penny doubled looks like for the first 18 days. So you start off with a penny, and then on day 2 you have 2 pennies, and on day 3 it's 4 pennies, and day 4 it's 8 pennies. I'll tie all this back to trading. I promise this is a newsletter about trading, but this is mindset, and it's very important. If you notice, on day 10, you only have $5. So if you were to decide to take the $1 million up front, it seems like you would have made a very good choice by day 10. Look, on day 18, you only have $1,310. If someone were to have taken the $1 million, they would have a lot more money. However, on day 19, it turns to $2,000, and on day 28, you now have more than $1 million. You have $1.3 million. If you take this all the way out to day 30, you have $5,368,709.12. The compounding over 30 days leads you to more than 5 times the amount of money you would have had if you would have just taken the $1 million. Study this carefully. This is the secret to your success in the market. So let's think about trading this way. I have children, and my son loves to play with Legos. The older he gets, the more he wants to play with those. I'm not sure if they have Legos in every single country or in the country that you live in. I know for most of you, you are familiar with Legos. But a Lego is just a building block. It's a children's toy, and these blocks can be placed together. So the blocks can come together like this. So if you have a lot of blocks, you're able to build something like a tower. But some people, like this guy, are able to take so many Legos and combine them in the right ways that this guy in the blue shirt here has literally built an entire city of Legos, starting with this single little building block here. So what am I talking about? How does this relate to trading? One winning trade is one Lego. The point is, you're not going to get rich on any single winning trade. You need to look at every single winning trade as one Lego. When you have enough Legos, you can build something like this nice pyramid here. But in time, if you just focus on making one Lego at a time, not getting rich, not changing your life, not altering your family's future, just making one Lego and then putting that Lego together, in time, you will find that you can build an entire city. That's another little secret to the mindset behind trading. One winning trade is one Lego. All right. So let's get into the market information. So we're going to start with Forex. I'm going to go over some things, and then we'll jump into some stock market related stuff. But I'm going to try to keep this video a little bit shorter because I had the previous video, and then next week I'll just do one single video that's a little bit longer. So for the Forex market, we're going to talk about tweezer setups. Simple, but effective. Now, I already covered this in this video, the best candle pattern of all time. But there's a very key thing that I left out of that video, and this will make all the difference in the world. Bollinger Bands. Yes, Bollinger Bands. Now, this is the US dollar-yen currency pair, and this is the 390-minute chart. If you don't know why I use a 390-minute chart, then you probably didn't watch the video before this one, or my time frame video. However, what a tweezer bottom is, here we go. I zoomed in just a little bit. Here's the 390-minute chart on the US dollar JPY. What a tweezer bottom is this right here. All right. You have a red bar followed by a green bar. The important piece is that the bodies have visually, don't zoom in and actually look at values and get very close like that. Again, this is an art and not a science. But if you look at the bottoms of these candle bodies, red followed by green, visually they are about the same. We're not looking at the wicks. Do you see what happens here after this setup? We have this move up. The important piece is that these are outside of the bottom Bollinger Band. So here's the Bollinger Band. I gave you the parameters in the previous video. This is a red candle outside of the Bollinger Band followed by a green candle outside of the bottom Bollinger Band. They have visually on their bodies the same bottom. This leads to a move upward. Just so happens that the move upward also ends in a tweezer candle pattern setup. That's right here. You see this? There's a green candle followed by a red candle with visually the same tops to the bodies. And what does that lead to? There you go. All right. So the 390-minute chart, same thing. I'm going to add this oscillator. This is that custom stock RSI oscillator that I talked about in the previous video. So let's just add this to the setup. Now I just pulled this off of the charts from today. So this is an up-to-date chart as of October 14th, 2020. This is your tweezer bottom outside the bottom Bollinger Band. But I want you to notice that we also can add to this an indicator, an oscillator like the stock RSI. Maybe you want to use the stochastics. But this has been oversold. So that's just one extra level of confirmation for us. When we reach this next tweezer, we realize, so let me just go back one step. When we reach this next tweezer, this oscillator has not been overbought yet. But let's back up even further than that. Let's just say we were to enter the trade here at the end of this green candle because we have a tweezer bottom. Where would we exit? Well, adding this oscillator helps us. Number one, we would like to trade from this bottom Bollinger Band to the top Bollinger Band, because significant moves will always move from the bottom Bollinger Band to the top Bollinger Band, or from the top Bollinger Band to the bottom Bollinger Band. So one way to exit is to wait on the price to actually touch the opposite Bollinger Band. But we can also use this oscillator to judge the range of the move. And right here where these candles are, not only have they not touched the top Bollinger Band, but the oscillator is still moving from areas of overbought. Sorry, let me walk that back. From areas of oversold to areas of being overbought. Okay, so right here, this puts in a tweezer bottom, which would be a very good indication to get out of this long position. But if you wanted to wait, until the oscillator was actually overbought to enter into the trade, you can see that that gives us a much better entry. So we know that we have a tweezer top, and then we know that the oscillator is overbought a few candles later, and we can go ahead and short that position, and that position ends up working out quite well for us. And we could take that all the way to an area of here, which is, again, on the oscillator, it's oversold because it's below 20. But we also come down to the opposite Bollinger Band. So here is the 390-minute chart of the Euro US dollar. Okay. Now you notice that I'm not using a 30-minute chart. Notice that I'm not using a 60-minute chart. I'm using a 390-minute chart. This is a large chart. I want you to remember something. Big charts equal big money. Small charts equal small money. Trading big charts allows you to have a life. Trading small charts makes you a prisoner to the market. You have to sit there and watch it all day long. Many of you have jobs. Many of you have careers. Many of you are not able to look at the market. You have to trade big charts. All right. So I'm going to cover a lot of big charts. Now, on this newsletter, will I cover intraday trading or some day trading things? Absolutely. For sure. There are day traders on here who are participating with us. So I surely won't leave them out. But I do want to bring up the point. Big charts, big money. And you can be patient with big charts. So let's just go over a few things. You see this tweezer bottom, right? Does that tweezer bottom end up working out into an up move that works? Do you see how at the same time that we get this tweezer bottom outside the bottom Bollinger Band, that we have an oversold situation on our stock RSI? Is that a tweezer top? Absolutely. That's a tweezer top. Green candle followed by a red candle. Visually the same top on the candle bodies outside the top Bollinger Band. Stochastics have been overbought. Remember, I didn't create these charts. I literally just pulled these charts off the platform. Okay, so these were opportunities that presented themselves here in the recent past. And I want you to pay attention to just how large these moves are right here. So we're moving from 1.2 all the way down here. Look how large that move is. It's very significant. This tweezer bottom, well, you say, well, that's not outside the bottom Bollinger Band. And if you were to say that, I would agree with you. But again, remember, this is an art. It's up to you if you want to take that trade. All right. If you've done the research and you feel comfortable with that trade because of maybe you're adding multiple indicators. I use many more indicators as we've already talked about, but maybe there's a reason you want to get in this trade. And it's not quite a tweezer bottom, but everything else is setting up properly, but it's very close to a tweezer bottom. Maybe you want to enter this trade to the upside. And if you did, I could not fault you for it. It ends up being a pretty good trade to the upside. Here's another tweezer bottom. Outside the bottom Bollinger Band, red candle followed by green candle, visually the same bottom. This time the oscillator does not make it to overbought areas and the position reverses itself. Okay, you need to think about how you're going to handle that. And then lastly, here's a tweezer bottom that simply does not work. There's no technique that's going to work a lot, but I want you to see just in this snapshot, you have 1, 2, 3 very good setups, a fourth that ends up turning around, but you don't have to lose money on it necessarily, and a fifth that doesn't work. This is what trading setups look like, all right? None of them are perfect. This is made to be added to or implemented into what you are currently doing. Now you have to do the work. So what's the work entail? The work entails you taking your charts and going back in time. If you're using a charting platform, there is history. You have to look at that history as footprints in the sand. What it is showing you is what has happened in the past and what may be likely to happen in the future. So your job is to go back and see if you can identify these tweezer tops or tweezer bottoms. See if you could figure out where you should enter, maybe where you should exit, or how this fits into your strategy, or if this is helpful at all. Maybe this is not helpful for you in your Forex strategy. Maybe what I talk about next week or the next week will be. But it's your job, not mine, not anyone else's, to take your charts and go back in time. Your charting platform has a history to it. Use it. If your charting platform doesn't have very much history, you should probably figure out how to get on a charting platform that does have history. My charts specifically will go all the way back to, I think, the 1920s. So it will go back at least 85 years. It might go back 90 years. That's for like daily charts. For intraday charts, I can go back, I think, 30 or 35 years. So I'm able to not just see something that worked here in the recent past, in the last year, 2 or 3 years, but I can see decades of information in order to test these types of things. So let's get to the stock market. Stock market, what are we going to talk about with the stock market? So what is this right here on my screen? Many of you recognize this as a picture of the United States. So you have Mexico here at the southern border of the United States. This would be Texas. Here's Florida, the panhandle of Florida. And then here's my state. This is South Carolina. This is where I'm from. I live right here on the coast in Charleston, South Carolina. Why am I showing you this picture? Because if you look at this picture, it looks fine. There's a little bit of cloud cover. You know, you can see everything looks normal. There's nothing wrong with this picture. But this is the actual picture. When you zoom out, there is a giant, massive storm just off the east coast of the United States in the Atlantic Ocean, and it is barreling, heading directly towards the United States. Right here, some of you are watching this and you actually live here. You're used to hurricanes. This area is getting demolished by this hurricane right here. I live in Charleston. We get hurricanes regular, but nowhere near as much as people who live here. So why am I showing you this? There's a very big lesson here. Some of you are too close. You are too close to your charts. You are looking at things in too small of detail. All right, and I'm going to bring out some real life stock market examples in just a second with this. You understand, you have to look at the larger charts in order to see what is really happening. If you only ever look at a 60-minute chart or a 2-hour chart or a 4-hour chart, and you never look at the monthly, you never look at the weekly, you never look at the daily, you are essentially looking at the United States like this. But what if there was a hurricane off the East Coast? Could you see it? You won't see it like this, but if you look like this, you could actually see this hurricane coming way out in the ocean, and you can prepare for that. But if you're too close, if you're trying to look at intraday charts all the time and you're not looking at what is happening on a macro level, you're setting yourself up for failure. You have to analyze the larger time frames. It is very, very important to your success. Here's a good example. Here is a snapshot of what my charts look like, by the way. Don't get overwhelmed if you're a new trader. Again, you eat an elephant one bite at a time. We're going to take this slow. You don't have to understand all of this right now. For you more advanced traders, you may look at this and you say, okay, here's a 60-minute chart for QQQ. Some of you watching this think that a 60-minute chart is a large time frame because you trade 1 minute and 2 minute and 5 minute charts. That's fine. There's no problem There's no problem trading those smaller time frames. What I'm trying to get you to do is become more aware of what's happening on larger intervals, and I'm going to show you why in just a second. If you look at this charting time frame, you see, okay, well, we are definitely oversold on this oscillator. We're at the bottom Bollinger Band, very clearly an uptrend. The last time we were oversold on this oscillator was down here, so we're putting in a higher low. This looks like it's set to go up. If I follow the order flow and the accumulation distribution, I can see that this security has been being bought. QQQs, which is essentially, this is the NASDAQ in the U.S. markets, but you can apply this to literally any chart. You can apply this to any market, whether it's in the U.S. or not. You can apply this to any index, any ETF. You can apply this to anything that charts, right? You can even apply this to Forex as well. And you should apply this to Forex. The point is, when you look at this chart, it looks pretty good. Notice this blue line, this is your plus DMI. When this blue line goes below the red line, notice what happens when it moves from below the red line to above the red line. You have a move up, right? So blue line below the red line to above the red line. Look, it's happening right here, below the red line to above the red line. This is going to be a move up. It looks great if we're only looking at the 60-minute time frame. You know that I use the RSI to figure out trend, right? To confirm trends. The RSI is above the 50 area. This is an uptrend. Everything is pointing towards this going up and appreciating in value on the 60-minute chart. Why is it important to look at other things? Well, because here is the daily chart. Now, if we look at the daily chart, wait a minute, it's a little bit of a different picture. The daily chart, we're actually overbought on the stock RSI. We're overbought here. We have some price action that's outside the top Bollinger Band. This is not a tweezer, but it looks very close to a tweezer. I would say this is tweezer-ish. We have the accumulation distribution. It had been accumulating, but now it's at a lower level than it previously was back here. Okay, so obviously there's a little bit more distribution than there's accumulation. And we have the exact opposite happening right here. What do I mean by exact opposite? Well, the negative DMI is down here low, and it's coming upwards now. This is a very bearish or downward thing. See, last time the yellow was here and then it came up. The last time the yellow line was here and it came up, we had this, right? Previously, the yellow line was here and it came up. We had a downward move, right? Here, there's a little small one where the yellow came up. Again, none of this is exact science, but we look at these generalities. Back here at this price point, we had the RSI value way overbought, very, very high. Here, we've reached a similar area in the price, not quite, but it's significantly lower. This is a very bearish chart. Okay, there's nothing about this chart that says, yeah, we should go up from here. But remember, just a minute ago in the 60-minute chart, everything indicated that we should be going higher. And if this is the largest charting time frame that you were paying attention to, there's a hurricane off the coast, and you're not paying attention. Now, these charts are in real time, so I'm not going to tell you which direction I think the market's going to go in over what time frame, but I think you can maybe gather some of that information. But I would argue that a daily chart's not even really that big. What if we move to a monthly chart? What story is this telling? Well, first of all, we're overbought on the monthly chart, significantly overbought. Overbought kind of like we were before this big move. Well, what's this right here? Could you make the argument that this is a tweezer top? Now, we just looked at those in the Forex market and we saw what happened. Green candle followed by a red candle. The tops are not exactly the same, but visually they're pretty close. It's enough to be aware of. What typically happens after this red candle? Yeah, usually there's a lot more red candles. All right, the accumulation has been working upwards. That's okay. But this recent little lip here is a little bit lower. And that yellow line is down here deep. Okay, the last time the yellow line was here, it spiked up whenever we went through COVID and the markets fell. Previously was the end of 2018, and we fell in November and December, and we recovered in January. But that's when the yellow line was back down there again. Not to mention that the RSI was previously overbought before this big slide for months in 2018. Is overbought here at the beginning of 2020. There's your COVID-19 slide. Look at this. We are overbought again. But not only are we overbought, but previously when we were overbought back here, we had these levels that were around, I think like around the 80 mark on the RSI. Right now, the price is significantly higher than it was there, but the RSI is not as high. This is known as a divergence. This is an RSI divergence. This is something to be aware of. So just going back and covering this, 60-minute time frame, everything looks good. We're going up. Daily chart, ooh, maybe not. This doesn't look very good for the near term. So 60-minute chart will tell us where we are going over the course of the next several hours, right? So if the candles started to paint themselves and we move forward, this chart would tell us where we are going for hours, okay? The daily chart tells us where we're going to go for days. So Would it be beneficial to know if you were trading on a 60-minute time frame or a 30-minute time frame that the daily chart is actually set up to fall for days potentially? Again, this is just probabilities and potentially. But would it be helpful to know that? How well do you think your intraday trades are going to be to the upside when you're fighting against a daily chart that wants to go down? I would argue they're probably not going to be that great. And then on the daily chart, if you're trading the daily chart, you also know that the monthly chart is set to fall too. So something to be aware of. Check your market. At whatever market you trade, check it out. Go look at the monthly chart. Go look at the weekly chart. Go look at the daily chart. What is the story that those charts are telling you? Use your indicators. See what they're saying. If you're not paying attention to those larger time frames, you need to go look as soon as you can. Because the point here is that we always want to go in the direction of the overall market, which are the larger indices in the U.S., like the Dow Jones, the S&P, the Russell, the NASDAQ, or the large indices in whatever market you currently trade in whatever country you are in. We always want to trade in those directions because it makes it easier, but we also want to know kind of the macro trends on these charts, what's going on in the weekly or the daily or the monthlies, and we would prefer to trade in the direction of those charts when we can. Think of it like boating or having a kayak or a canoe in a river. Rivers always flow typically in one direction. I know of one river that goes two ways in the United States. It's a little bit weird. But rivers flow in one direction. And you can either paddle with the current, which is easy, or you can paddle against the current, which is very hard. Well, what I would say is the 60-minute is telling us that the current is going up. And if we decided to go up just based on the 60-minute, we actually don't realize that the stronger current is set to go down. In addition to that, upriver, where we're paddling against the current, there's a big waterfall, and that's going to work against us as well. So the point is, you have to be aware of that. So I'm gonna close this one up. I will get into more detail in future newsletters on actual trading, but I hope that was at least enough content to add some value. Here's something to remember. You will forget what you hear. You will remember what you see. You will understand what you do. So just do it. If you're ever going to learn this, if you're ever going to understand anything, you have to do it. No one else can do it for you. I can't do it. Your friends can't do it. Your family can't do it. Your spouse can't do it. Your kids can't do it. You have to do it. You have to put in the work. You're never going to be able to sit idly by and listen to someone like myself talk and be able to accomplish anything. So here's some things, if you need help, that you can go do. Research those tweezers with the Bollinger Bands and the oscillators. Ask yourself, how do you fit that into your current strategy? What time frames does it work best on for you? And remember, those have to be time frames that you can see and that you can actually trade based on your specific schedule. Not mine, not anyone else's. Are there currency pairs where this works better? That's a question that you should answer. What currency pairs do you like to trade, and do they work better? To that point, and I haven't even mentioned it in this newsletter, that made me think of crypto. I covered a bunch of asset classes earlier and didn't even talk about crypto. Crypto charts just the same, so pay attention to that. And I'll talk about things, whether they're Ethereum or Bitcoin or whatever, in future newsletters. So I don't mean to just leave you out to dry there if you trade crypto. Can you use multiple time frames at once in order to filter out bad setups? In other words, if you're using a 4-hour chart, what does the next larger chart say? Again, are they moving in the same direction, or are they contradicting each other? If they're contradicting each other, you may want to wait until they are confirming together the same direction. How will you know when it's not working, and how will you exit? That's not up for me to tell you. That's for you to determine by doing the work. So do that this week. Find these setups and look and say, well, how would I know when to get out? And what would tell me where a good exit is? We'll cover exits 1,000 times, I'm sure, on this newsletter. But for now, you put in the work, because no matter what I say, just remember, you're only going to ever understand what you actually do. Next, look at larger time frames. What are the larger time frames telling you about what is likely to happen? How will you profit from knowing this information? Do you think you should trade in the direction of the larger charts? Maybe. I'll tell you what my answer is. I very rarely trade against larger charts if I'm trading a smaller time frame. If I do, I use less money because I know that those big charts, powerful charts, are going against me. And here's the thing about charts. The small charts will always do the bidding of the larger charts. The small charts do not tell the big charts what to do. The big charts tell the small charts what to do. All right? So do that work this week. Don't forget, if you're a trader, email me your setups and your strategies if you have them. Maybe not many of you will trust that at the moment, but in time, hopefully we can get you there. If you're willing to share, I'm willing to test it out and take a look at it. I do hope that in time you will contribute. That's the end. That's going to wrap up this week's newsletter. I'll talk to you all next week. Hopefully I can get that divergence video out, but just getting this newsletter off the ground has taken everything I have. So I hope that this content was at least somewhat valuable to you. You can send me your questions via email. I will respond when I can. Just thank you. Thank you for participating in this. Thank you for being here. I hope that you have a profitable week. I wish you health and happiness, and just keep going. Don't quit. Don't quit. If there's any message I could leave you with, it's, again, the opposite of success is not failure. Failure is a part of the process. Failure is necessary. You're going to have to fail at this over and over and over and over to get better. That is a part of the process. If you're going to make it to a level of success, failure will be your stepping stones on the way to that success. I promise you. So never look at failure in a negative light. It's just an opportunity to learn. And the money that you lose when you are trading to try to learn, that's just the cost of admission. That's the cost of your education. So you have to look at it that way. The opposite of success is not failure. The opposite of success is quitting. Quitters never win. Winners never quit. So don't quit. Keep pushing forward. Keep trying. Make yourself better. Read The Slight Edge. Think about the little things that you can do each and every day that will compound and add up to a radical change in your life. I love you. Good luck this week.